Hi, and welcome to the CappThesis YouTube channel. I'm Frank Cappelleri, president and founder of CappThesis, where we help active investors identify key market trends and present actionable trade setups, all through the use of charts. And today we're talking about the S&P hitting its most recent upside target, right? And if you like this kind of content, give this video a like and subscribe, and you'll be notified anytime we put out a new video, right? And we want to hear from you as well. Do you think these are important? If not, tell us what you think the charts are we should be watching. Okay, so let's get into it right here. And so yesterday, which was the 27th of July, the big story was that the S&P and many other stocks and indices have big negative reversals, right? Went higher, a lot of them hit new 52-week highs, including the S&P, and then finished lower. But there was a bigger story there, in my opinion, and it's that the S&P hit another upside target. And this one was just from this cup and handle pattern we saw a breakout from that was never tested, and we hit the target of 45.90. Now, this isn't really that important in isolation. It's coming at the end of a big run here, right? So it looks like nothing new. That's really the most important point here, as we'll look at in a second. So again, we've seen this before, and to review some of the ones from most recent, the first one we've seen this year is this. And so this was a really important one. You can see how big the breakout was happening at the end of May. Now, we did get a little bit of a whipsaw initially, but that sell-off, of course, was very shallow, and most of them have been this year, especially from March. And after the second attempt, of course, S&P never really looked back, right? It had a breakout right around 41.75. 4,200 was on a lot of people's radar screen as well. And we saw the target hit a 45.40. And again, after that started to happen, then another pattern developed as well. And that's important to remember. And so before that, now all the patterns were big like that. That one took place over multiple weeks and 2 months or so. Sometimes along the way, you just have short-term continuation patterns. And that's what happened at the beginning of June here. This bull flag occurred just over a few days, where you can see what happened, right? What is a flag? You start with a flag pull, basically just an initial move higher, consolidation point, and a breakout from that consolidation point. And this is the measure move. Again, after the initial breakout, it only took a few days, but another upside target was hit. Again, very important to keep track of all of them along the way. And really, this began to change at the very end of the first quarter, beginning of the second quarter. And remember, coming out of this regional bank crisis, and the market was down already 9 or almost 10%, and much more for other areas, there is a lot of fear in the market as well, because we remember what happened last year, right? And so really we're out of the woods just yet at that point. And so we had the breakout, but within about a month or so, it was tested and then tested again. Both times, again, didn't seem like the best feeling when it was going on, of course, but when the second time held, that's when we saw the real liftoff, right? May began, large cap growth started to get a big bid that developed in rotation, and we see what happened here, right? With the target being hit just about 2 months after it was triggered, right? And so again, we saw now 4 of them along the way. And you see how one led to another. This wasn't always the case in 2023, even though these numbers are big, as we know, for the year for so many areas, because initially you had a good comeback to start the year, just as things were looking good and breaking out at the beginning of February, we lost the bid. And so this bullish pattern was negated. That's a big deal because, again, we saw some big moves from the lows, but we want to see for a consistent uptrend to begin, are these foundations being built and taken advantage of? And again, we didn't see that at the beginning of the year. That's why the breakout we saw at the end of March into April was so important to see held. So what was going on back then? We were seeing bearish patterns still being formed and targets hit. And this one is a 30-minute chart, but this is a basically close-up of what happened back in February and in March of this year. And so first downside target was hit, and then really that's when things took off. So as you go into March and as the regional bank crisis took hold, a bigger bearish pattern happened. And again, we all have recency bias, and the thought was if we got that downside break, it wouldn't be too much to see that actually S&P hit that downside target. Well, it didn't, right? It reversed at that point. And again, right on a dime, things changed. And again, the impulse move higher wasn't anything until we saw the bullish pattern starting to work. But since that point, bullish patterns have been working. Bearish patterns have not been. And so this is just the latest example of that occurring, where we had a potential bearish formation form at the beginning of June. That did not work out, and we know what happened. Ended up being one of the best Junes and months we've had in years for the S&P and many other areas as well. And so all that together, successful bullish patterns, unsuccessful bearish patterns lead to uptrends. And here this is, right? And it started, of course, from the October low, but I mean, this is a lot of wiggle room to deal with if it's going back down and touch it. It will still be in an uptrend, but the more substantial uptrends that are a little steeper, have been formed because of these bullish patterns, right? And that's what we have to look for going forward. Now, is it going to be this quote unquote easy from here on in? Probably not. You may have some bullish patterns fail, but overall, you want to see all this work together, where the majority of the patterns that we see on the bullish side work, and the ones from the bearish side fail, and that's an uptrend and can extend further from here. So that's all for the content for today. If you want to look at more content that we have, come visit CappThesis.com. We brought to this page. You can scroll down, see all of our product lineups, what they're all about. And if you go even further, you'll see 6 always most recent unlocked newsletters as well. And if you want to see everything for 30 days, all the premium reports, have your 30-day risk-free trial, and you'll see everything we have. Thanks, and I'll see you next time.